Canada's top banker confirmed the battered economy is worse than expected, with negative growth every single month this year and likely more to follow. But Stephen Poloz won't call it a recession.
The economy did have a mild contraction in the first half. I'm not going to engage in the debate about what we actually call this.
Poloz says the economic outlook has been marked down considerably. He blames the continued fallout from the oil shock and a puzzling decline in exports. So Poloz hopes another rate cut will boost the economy by making it even cheaper for businesses and consumers to borrow money.
By cutting rates, we are taking a risk.
Poloz acknowledges lower rates could drive up consumer debt and pour more fuel onto Canada's red-hot housing market. But he says he's weighed the risks and decided the struggling economy is the bigger threat.
By addressing that, we are addressing the trigger part while taking a bit of a chance that there may be some edging higher of the vulnerabilities.
The loonie tumbled more than a full cent today. It's expected to sink even lower. And that may be the real stimulus behind Poloz's latest move.
Cutting interest rates in order to weaken the currency, that's the Bank of Canada's best hope in order to try to ignite export growth.
Even with rates edging closer to zero, Poloz says he'd consider another cut.
If we are disappointed one way or another, then we have room to move. And as I said, we have other tools in the toolkit that we can appeal to.
And with an election looming, Conservatives are now trying to spin this bad economic news to their political advantage by deflecting blame and saying voters shouldn't take unnecessary risks by electing Liberals or New Democrats in October. Graham.
Thanks, Richard.